Hello and welcome everyone to another series of our knowledge base. And this one is called support and resistance. So today we're going to talk about one of the most important concepts in trading, namely support and resistance, finding support zones and resistance zones. And in order to understand what I'm talking about, we need to be aware of one very important concept. The market, as we know it, in general consists of three types of participants. And this is always the same. We have people that are long, basically our longs. These are people who already bought into a position or into a coin and are profiting, are basically making money whenever price moves up. Then we have our shorts. These are the participants that also already bought into a position or hold a position, but they bet on prices to go down. Hence, they make money whenever price declines. And our third group is the group of people that is currently flat, meaning people or participants that are waiting for specific levels to be hit, to be visited by the price in order to go either long or short. And what that is what you can see on the chart. You were probably aware of the fact that the price on the chart always moves between different levels. It goes up and it goes down, and sometimes this all looks pretty arbitrary. But in reality, it's not. In reality, whenever price goes up, it's usually, or it's not usually, it's because there's more buyers than sellers. If the price goes down, naturally, there's more sellers than buyers. So what we need to find out is the levels where buyers are willing to step in or where sellers are willing to step in. Meaning, whenever the price hits a specific level, and this is, for example, a support level, so price goes down, hits a support level, and if many people in the market think that this price is cheap, that this is a good price for a specific asset, they will buy into this. If, on the other hand, price reaches a very high level and many people think, wow, this is too expensive, or maybe I already have so many profits waiting for me to be realized or waiting to be realized, then they will sell. So these levels, in this case, act as resistance levels. And I will go to the charts and show you a couple of examples how to identify these support and resistance levels. And in order to make this more tangible, I'm going to show you the ETH USDT chart, and we'll explain and give you some examples of how to set and how to identify these very important support and resistance levels. Let's just look at this chart. We're on the 4-hour time frame, and if we see this, we want to get an idea of where price might be rejected, where price might go down, and where price might go back up. So what we see immediately is a very clean idea of where the high points are. Here, for example, this is a very important high point. Let's switch this to black. There we go. So what we can see here, this is a very important resistance level. Price came up, pushed into this level, and got rejected for the first time. It tried again. It wigged above a couple of times, but couldn't really break that, being rejected. The third time, being rejected. The fourth time, being rejected. It didn't even touch that level exactly. It was even rejected prior to touching it. So one very important thing about support and resistance lines, they're never going to be perfect because market participants act in a specific way, and in only very, very few occasions we will get a line and we'll get a level which 100% aligns with the accuracy we would want to have. So as you see here, there's always some sort of a small wick above, a small wick below, and this depends on the market participants and also on the perpetual trades where people can actually trade with higher volume. But this is something for another video. Here we see a very clean resistance line, meaning price is being pushed down. So if you have a strategy that allows you to identify at what point you will get your entry trigger, this can be very profitable whenever we reach that price, whenever we reach that level. identifying your entry trigger, shorting this level, and riding this all the way down to your take profit. The same here and the same in other levels. What else can we see? We see something very similar around here. This is a key level. I mean, look at this. Price is being rejected to the upside, being rejected to the upside. Bum, 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 bum. Here it's consolidating, breaking down, being rejected to the downside, breaking through, being rejected. Down we go. Breaking up, being rejected. Down we go. And even here, it's a matter of your own style and, of course, a matter of the time frame you're using, because these charts look different on different time frames. How exactly you draw the line. We always try to capture as many touches as possible. This makes it just much more reliable. Same here. If we go here, this is what we see. Price comes back down, gets rejected, bumps back up, comes back down, pushes back up, comes back down, pushes back up. And you see how these levels can give you a really, really good indication of what the price is going to do. So when we have ranges, when we see that price moves within specific ranges, for example here, it can be very profitable not always to wait for a breakout, not always to wait for the price to break these levels, but to playing this range. Here, whenever we touch the higher part of the range, we short. Whenever we touch the lower part of the range, we go long. This can be a very, very profitable and important strategy. So you see how the idea of cheap price here, Ethereum was selling off very heavily into the 2,600 region. Many people obviously thought this is a very good price for Ethereum, and buyers were stepping in. This is why price exploded to the upside. Then we had some retests. Price was going back down. Obviously, many people were taking profits, riding the price back down. Here again, buyers decided, hey, this is very cheap. If I want to hold Ethereum, I want to buy it here. And price shot back up, and so on. So identifying these levels will be a key part of your training journey and trading journey, because this allows you to anticipate how other market participants are going to react at specific levels and where to place your longs or your shorts. And the interesting thing is that this works on all time frames. You can do exactly the same on the hourly. Now we're on the 1 hour chart. Let's just look here, and we can do exactly the same. We look at the wicks, we look at the levels, we see, wow, again, here, very important level. And we see the same up here. Here, very important resistance level. Even though we see some wicks above, that doesn't matter. That, as I said, it always happens. But we see, even on a different time frame, it's the same. And we can do the same across all time frames, the daily, the monthly, the 15 minutes. We can even go down to the 1 minute, and we immediately see, hey, there's specific levels that are being accepted or broken through. Let us just find very quickly an example here. On the 1 minute here, we see here's an important level. Price was forming that level, coming back down, retesting that level, being pushed back down. Again, retesting that level, being pushed back down. Breaking exactly above the level, retest, accumulation, breakout. Coming back down, retest, accumulation, breakout. Even when we come back down, when we move or when we approach the level from the upper side, sellers are heavily selling into these resistance zones, prices being pushed back down. And what we can see here, the former resistance line now turns into support for a specific amount of time. We see how this former resistance now acts as support, and price can hold above. Yeah, eventually it might break down. Sometimes it doesn't. Sometimes we see accumulations and price shoots back up. But in this case, we see how this level works on different zones, on different time zones, and how we can see a specific resistance support flip. And this is something we always need to be aware of. Whenever there's a resistance and we break through that resistance, it might easily turn into support. So this means these levels are very important on different time frames and within a different context. So this is what we need to know.